afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me is Aisha Faridi. It's Friday, last 1 hour of the trading session for the week to go, and it's pretty much okay. There's a bit of a green on the screen. We are above the mark of 22,000. Has been very stable around that mark. So it hasn't been a very volatile day at the index level itself. Even Nifty Bank has been comfortably in the green. The broader market have been cruising along very nicely. So there's nothing untoward as such which has happened so far. And let's hope that the next 1 hour is such as well. In fact, the auto index is sitting at record high levels, and a lot of its constituents, whether TVS Motors, which hit the mark of 1 lakh crore capitalization today, Bajaj Auto, Maruti, M&M, all of these stocks are sitting at record high level. Energy and PSU as well, at least at some point of time during the day, were sitting at record high level, though of course they've cooled off materially. Energy pack specifically has cooled off. In terms of the other pockets, take a look at insurance. New India Assurance is up 14%. GIC is up a solid 12%. You also have SBI Life, which has managed to perk up around 4%. And from the frontline index itself, Wipro is one stock which deserves mention. In the last few minutes or half an hour or so, Wipro has managed to catch up quite a bit. There's a gain of almost 5% there. Of course, this week there was the news flow of one of the acquisitions that the company had made, but shouldn't have been material enough for that stock to move almost 5%. On the losing side, not many names to be honest. There's PowerGrid, Britannia, but I think Aisha today belongs to more on the bull side rather than the bears.
Oh yeah, absolutely. Just looking at the texture of not just what the large caps are doing, but what's really happening within the broader end of the market as well. Ipca Labs, Granules, Glenmark, and clearly renewed optimism across the mid-cap pharma end of the market specifically. And of course, the metals rally as well chugs along quite nicely. Nalco has been seeing 3 days of a continual bout up. So that stock is holding up well, and NMDC as well. Federal Bank has surged 4.5%. And then it continues to be M&M, in pole position within the Nifty, Maruti, or for that matter, even L&T, which is participating today. Let me take that point forward with Soni Patnaik, Andrew Holland, as well as Naresh Mirani, and find out what they're making of the market and how this week or next week is going to pan out, really. Naresh, hi, afternoon. Firstly, let's come to you. What's the trend you're picking up within the pharma names, especially mid-caps, Ipca, Granules, Glenmark?
So the trend is pretty strong. Granules is something which I'd been recommending for a week. Finally, the stock has broken out above that 440 mark. That opens up a target price of 480 to 500 in the short term. Ipca Labs also gave a breakout above 1150, which opens up a target price of 1400. So pharma looks pretty positive in terms of the mid-cap ones. The large cap ones like Sun Pharma has gone up slowly and steadily from 1000 to 1500. In the large cap space, Dr. Reddy still looks positive. The breakout was at 6,000. It's gone up only to 6,300. Upside could be closer to 6,800 to 7,000 on that one in the extreme short term. So Dr. Reddy is in the large cap, Granules in the mid cap, and even Ipca Labs look promising.
So that's the take as far as pharma stocks are concerned. But let me bring Andrew Holland also into the conversation. Andrew, what's your view on pharma?
I think there's so much rotation that if I say that I don't see very much catalyst for the pharma sector, then it'll have its own run. So that's the kind of market we have at the moment. It's all momentum based, and it's shifting from sector to sector depending on what news you have. If it's a bit more negative, then pharma does well. I mean, globally in terms of negative news. But we're doing the kind of, if you take the IT sector again, it was doing nothing, and then with the kind of moves that you've seen in NASDAQ and the expectation that even with interest rates not falling, these companies will do well, and that really is where the bottom is for the IT companies. So, it's fundamental wise, it's difficult to justify some of these the move that we've seen. But momentum's there, so it's hard to fight this momentum, but it is more rotational. So I think fundamentally, I'm not so keen on the pharma sector in the short term, but it will have its own day as we've been seeing, and certain stocks will have a run up.
Well, yes, it's certainly having its day in the sun today for sure, because the pharma pack is fairly active. But Andrew believes it's more rotational rather than a fundamental, structural story there. But Soni, what do you make of the market setup right now? Momentum is definitely on the upside. We are less than 200 points away from that all-time high level on the Nifty now. Do you think next week we are set for fresh highs?
Good afternoon, Anisha and Arsha. Thank you so much for having me on the show. I think, yes, definitely today we've seen Nifty holding up above 22,000, and there's a significant open interest additions happening at 22,000 put, which is indicating that the support has definitely risen from 21,500. Now there are multiple support in the range of 21,800 to 22,000. And the weekly closing also that can happen above 22,000 most likely today. So going forward, 22,100, 150 is the previous all-time highs, which may hold some resistance, but once broken past it, Nifty can head towards 22,500 to 22,600. So this may happen by the end of Feb series, and similar structures getting formed in Bank Nifty as well. I think Bank Nifty is heading towards 47,000. Any point above 47,000, you can see very sharp short covering happening in Bank Nifty up to levels of 48,000. I think Bank Nifty also has formed multiple support in the range of 45,500 to 46,000. So both the indices are looking quite positive for the next week.
Right, okay, that's the take coming in on where the markets are headed. But just look, has already hit a life high. Continual up move in the stock, now at 1800 plus levels. What next?
So the stock gave a breakout about 1750, which was the last top 3 times over the last 2 months. The breakout has done the last range was roughly 150 to 200 points. So in that case, would expect a target price of 1900 to 2000 in the short term. And going forward, any dips back to 1750 remain a buy. So the stock remains a hold at current levels. The trend is strong, and it has gone through this consolidation phase for the last few months. So should continue to slowly and steadily do well, would be the view.
Slowly and steadily, but definitely the auto pack is on the front foot today. So let's wait out and see where it heads. But time now for a short break on the show. Don't go anywhere.
Back with closing trades right here in ET now. The auto story chugging along nicely, PSUs as well delivering, and the energy sector. In fact, I should say the commodity basket is what's really been holding out well. Andrew, wanted to get your thoughts in on OMCs, ONGC, even for that matter, Coal India, the way it's moved up after its earnings, or for that matter, the positive surprises that one has got from NALCO, NMDC, all moving up quite nicely, the entire commodity pack.
No, the market's been rewarding those companies which have surprised on the upside and equally on the downside. But actually, you may get 1 or 2 days where the share price falls and then it bounces back very quickly. So it goes back to what I was saying before. We're a momentum-based market. And therefore, even if you fare poorly in the results, you're going to get some momentum behind you because of just the rotation that we're seeing. But I do like the metal stocks a lot. I think that's an area where I think we're going to see continued rises over the next course of the next month. And mainly because I do expect China to come up with some stimulus as well, which will help all the metal prices going forward. So that's the key, I think, for the next leg of the move for the metal prices or metal stocks going ahead. In terms of the oil companies, it's hard to kind of bet against them. Everyone is all brokers' reports now are turning hugely positive on anything to do with public sector units. So it's really a PSU story for the time being. It's horribly overbought, but as I said, the momentum's there. So we're going to keep going like this until something happens globally. And at the moment, if I take what's happening in the US, the narrative is just the Goldilocks scenario of yes, inflation is not killing us. Interest rates might be delayed, but guess what? We got growth in earnings, so we'll play that theme for the time being, and that's really what's happening, not just in the US but in other markets too. If you look in Europe, obviously the fact that the UK is in recession, Europe's already in there, so the only way I suppose that the market's looking is that interest rates may fall a little bit quicker in Europe than they would in the US. Given inflation's falling as well. So whichever way you look at the mix, it's a kind of a different story for each region, but each is playing out in terms of markets just moving higher.
Andrew, this is a question I've been posing to a few guests and I'm intrigued to hear your views on it. Would you be a buyer in HDFC Bank right now or SBI? What will be the preferred buy?
See, I can't really kind of talk on individual stock recommendations, but I said that PSU banks have been on a tear, and that doesn't look as though it's going to change very soon. I think with the private banks, I think we know what the problems are in terms of NIMs and in terms of getting the deposit growth higher without kind of impacting that much more. And the RBI, obviously, from a regulatory view, is playing an increasing role. So I think that's what's holding back the private banks for the time being, and all the fun and action is in the PSU banks.
Just reading out a few statements that have coming in from NASSCOM, because they say that India will continue to grow almost twice the rate faster than the global peers, and the enterprise tech budgets will likely increase in 2024 versus 2023, and overall almost 6.5 lakh employees in India are being trained on generative AI, as well as activities related to artificial intelligence have jumped up by almost 9x, or expected to jump up by 9x in 2024. So strong statements coming in as far as NASSCOM is concerned. The domestic market has already grown 6% and it's expected to accelerate from here on. On IT, Sony, what's your view? Which are the stocks that you like from the IT pack? Today, clearly, Wipro is having a bit of a breakout.
Absolutely. I think Wipro is looking quite good even at current levels, and it has a lot of steam left for more upside. You can see 560, 570 coming, and the support is just rising. The current immediate support can be seen at 520, 525 odd levels. I think one can still hold Wipro for higher targets of 560. The other IT from the entire pack, from midcap IT, I would put my bets on Birla Soft. I think Birla Soft is a stock which is holding quite nicely above 800. So in short term, as long as it is holding above 800, it can definitely test 880, 890 odd levels. I think it's a good buy. Any dip, any decline that can be seen towards 830 would be a good range to get into. 800 stop loss and 880 and 890 targets.
Okay, that's the take coming in on what the IT pack could be up to from here. Let's also address some of the laggards, having said that. Reliance. And Naresh, we often talk about Reliance as to how this is one of those slow movers. One up day, one down day. Having said that, pretty much around all-time highs. What's next on the cards? When do we see a continual, meaningful up move in RIL?
So if you look at the recovery from this 2250, 2300 mark, which we saw in the stock, it has always continued in a slow and steady manner, taken a pause and then again made a move. So after that move from 2600 to 2800, it took a pause, drifted lower. Then again, we saw a spike. And now we are possibly again getting into a range-bound move of 2850 on the downside, 2970 on the upside. And the next move, we could go towards 3200. So for now, it remains a stock which is a buy on dips closer to 2850, 2870, or in momentum about 2980 for a quick spike. But the trend remains positive. The tendency also remains the same, which is slow and steady up move. So for now, it remains a hold at current levels, add on the way up about 2980 or on dips to 2850.
Coming in on Reliance Industries, and on that note, we let you go. Thanks so much for making time and speaking with us. But let's quickly take the closing trades as well from our chartist. Sony, what looks good on the charts as a closing trade idea?
The closing trade would be in Jubilant Food. I think Jubilant Food, we have seen it testing multiple times of support of 470, 475, and finally it has bounced back from those levels. And it is definitely heading to break above the 500 odd resistance. I think from current level, it's a good buy with 490 stop loss, 520, 525 target.
Okay, and Naresh, what looks good to you?
So that would be a buy on Ambuja Cements, which has seen good follow-up action. The stock has made a flag breakout above the 585, 590 mark and is not far away from an all-time high, which was last made around 600 levels back in 2023. So it looks like a momentum trade here. Could go towards 600 in the short for BTST and much more higher in the short term.
On that note, we're going to take a very quick break, but come right back. It's autos which are zooming up. So we'll tell you where is it that there's still value on the table within the entire auto pack.
Brewing as far as the entire aviation space is concerned. SpiceJet has informed exchanges that Ajay Singh and Busy Bee Airways Private Limited has submitted a bid for Go First. Let's take it across to my colleague Sameer to get more on the story. Hi Sameer.
So that's a big development in the aviation sector. The grounded Go First airline received a bit of interest from a couple of players, and what we are getting to know from SpiceJet officials that they have formally submitted the bid for Go First. SpiceJet CMD Ajay Singh, in his personal capacity, along with the BZB Airways Private Limited, in this collaboration, they have submitted the bid for the Go First, and the role of SpiceJet is that they are going to be, they will provide the essential services, the staff, and will provide operational expertise to the Go First if they are successful in getting the rights of Go First airline. We all know that SpiceJet airline is currently going through a revival exercise, but couple of days back they have shown interest and they have approached the resolution professional to extend the deadline, the timeline for the submission of bids for Go First airline. And now officially, SpiceJet CMD Ajay Singh, in his personal capacity, along with the BZB Private Limited, they have submitted the bid for Go First airline, and they are looking that if they are found successful, then they will be able to re-strategize not just the SpiceJet market share in the domestic sector, but they will be able to compete with other players, those who are having very strong hold in the Indian aviation sector.
Just to reiterate, as even Samir was flagging out, Ajay Singh in his personal capacity has made this bid, but SpiceJet will serve as the operating partner for the new airline, providing staff as well as services. And the role of SpiceJet as the operating partner for the new airline will be providing essential staff, services and industry expertise. And they say for SpiceJet, serving as a service provider presents significant opportunities for revenue expansion by leveraging its established infrastructure and operational capabilities. SpiceJet can optimize resource allocation and achieve cost efficiencies across various functions, including maintenance, ground handling, and engineering. So that's the latest in the aviation sector. But apart from aviation, it's about auto stocks and how they are chugging along very nicely, as we've been saying it. And auto index is at a record high, with a lot of its constituents being at record high as well. Ashwin Patel joins us to talk to us a bit more about it. He's, of course, the analyst tracking the auto sector at LKP Securities. Ashwin, recently we have been hearing reports that the passenger vehicle retail registrations have been slowing down, while of course the rural economy is picking up and things are looking on the upside for the two-wheelers. Do you think it's time now for a bit of a sector churn and portfolio churn away from four-wheelers into two-wheelers?
See, on the back of a very low base last year, two-wheeler industry has been performing good this year, and till date, more than about 12 to 15% kind of growth these companies are seeing at this point in time, and we believe that this industry will be definitely performing better than any other auto industries segments like passenger vehicles or commercial vehicles or tractors. So definitely, I think that they were running out of favor last year, but this year belongs to two-wheeler, I guess. So definitely, passenger vehicles, we are seeing that there is definitely some sort of slowdown observed, apart from the SUV segment, which is doing well. The small car segment has been running into huge negatives, especially for companies like Maruti. And while on the other hand, SUVs are running at a very good run rate. So I think apart from SUVs, overall passenger vehicle industry has not been, performing great. We know that the monsoons were not that great. There were, the unseasonal rains were there. So the small segment, which is quite price sensitive and mainly dominated by the rural markets, is facing sort of pressure. Definitely, we can say that there is some sort of revival we can see in the rural markets, but still they are not yet out of the woods because the overall Kharif was not good. The Rabi sowing was not great. So I think that surely passenger vehicles, had their great time, but this year belongs to two-wheeler. So there can be a good churning from passenger vehicles to two-wheelers because after the Q3 numbers were good for all the two-wheeler companies, and surely I would say that one can definitely look at certain companies within the two-wheeler pack.
Okay, that's good to hear. Ashwin, at the same time, what one has seen is that the farm equipment segment of the auto majors continues to be beleaguered. I mean, if you look at a conglomerate like M&M as well, while EV as a space may be what the street is excited about, but farm equipment, or for that matter, even for escorts, that really continues to remain under pressure. Do you see contra opportunities here, though?
See, definitely, I mean, this year is going to be a negative year for farm equipment sector. We believe about, mid-single digit kind of degrowth for farm equipment sector this year, as guided by the companies like Mahindra and Mahindra, Escorts, etc. So, everything will be pinned down on FY25 because if the monsoons are great that time, so we can see a good growth in FY25. So, but just like, IMD as well as SkyMed, both the Med departments have pointed towards a good growth in FY25. I mean, a good monsoons in FY25, so we can see a good growth in the FES segment. And at this point in time, at least the retails are holding on well, though the wholesale numbers are not looking that great. But going forward, as the non-agri usage of tractors also might go up depending on the capex cycle getting kicked in. So, though the agri usage, we will be sitting on the fences to look at the performance of the monsoon this year in FY25, and then only we'll be able to take a call. But as of now, we would stay away from that sector.
Okay, so staying away from the commercial vehicles, farm equipment specifically. But Ashwin, do you think this rally that we are witnessing is purely on the valuation re-rating that people are expecting? This year is going to see a lot of primary market action as well, right? Ather Energy just is looking at submitting its DRHP. We have Ola Electric, which is likely to come soon. Hyundai is going to be one of those major ones that Street is watching out for. What part of this traction in stock markets right now would you attribute to earnings versus valuation re-rating?
See, I think that surely, I mean, for the two-wheelers, at least the valuations are looking quite comfortable rather than passenger vehicles like Maruti is trading close to about 30 times and all. So while two-wheelers are, lower than 20s. So I think valuation definitely, though the markets have risen so much, the stocks have seen a lot of rally, but still, there is some steam left on the valuation side. Definitely there is some sort of comfort on the valuations because of the earnings that are looking good for the two-wheelers. Next year also it will be a good year for two-wheelers. So many launches are coming on from the houses of Hero MotoCorp, Bajaj, TVS, etc. So I think, to cash in on that opportunity, definitely we think that fundamentals are in place, but valuation opportunity is also looking great at this point in time.
Okay, Ashwin, great to have you on the show. Thanks as always for taking the time out and joining in. Let me also welcome on board Sunil Subramaniam and find out where he sees value within the auto pack right now. Sunil, hi, good to have you on the show as always. TVS is making new highs, M&M sitting on new highs, Tata Motors, Maruti already clocking fresh peaks. Where within autos do you find value to add afresh?
Actually, as the previous speaker spoke, right? Yeah, obviously two-wheelers with the growth in rural demand are obviously were not the hottest peak last year, but are showing better numbers and will do so through the summer. But I also feel that even within the cars and it was the SUVs and the cars valued above 7-8 lakhs, where the demand was there. This is part of that premiumization that we are talking in the consumer space. The bottom of the pyramid, entry-level cars and all that in the past haven't done well, but I do expect that along with two-wheelers, entry-level passenger cars will also show a bounce back. And hence, I'm bullish even on a car where the car manufacturers who are having a large in the budget segment, right? I think would still be a value. I also have a slightly contra opinion to his view that commercial vehicles, I still feel that with the capex cycle from the government started and the private sector coming on board, you are going to see, and even with an election year, you're going to see a lot of jeeps and trucks moving around. There is going to be heavy vehicle moving. So I believe we are in a fairly secular, logistics cycle happening along with the capex cycle. So to me, commercial vehicles still remain a good buy. Farm equipment and all that, I agree with him because when uncertainty on the monsoon, last monsoon was not great. So we'd rather wait and watch for the farm equipment side for how the monsoon pans out. But otherwise, I think passenger vehicles and commercial, entry-level passenger vehicles, as well as commercial vehicles will add to the two-wheeler pack.
Point taken on the auto pack and where you see value right now. But Sunil, what about the PSU pack as a whole? There's no stopping this rally.
See, there's ample liquidity in the market. The domestic SIP book has touched 19,000 crores, and 30% of that is in mid and small caps. And then you have another 30% in multi caps, where you'll say half of it is eligible to buy mid and small caps. So now to 19,000 crores, you have 45% of that money eligible to buy mid and small cap. Now, if you look at the valuations, right, overall market valuations are not cheap, right? So when then you are trying to use valuation as a filter, the public sector always being at a discount to the private sector for various reasons, right? The professionalism, government ownership, high dividend payouts. These are all the things which have dragged them down from a price to book or a price to earnings relative to their private sector competitors. But when you have so much liquidity chasing, right, then that price becomes attractive. You say, what is my margin of safety? Can this go down? Obviously, it was already very down. It can't go down very much more. So there is that incremental liquidity being diverted towards the lower PE, lower price to book status of public sector companies, and they're enjoying that ride, right? Now, if you ask me, fundamentally, has anything changed in the public sector, the way they do the business or the potential? One space I see, that is the space where, like a public sector bank, for example, if corporate lending is to pick up with the private sector capex cycle, I would say public sector banks have a much greater market share because they've historically been the leaders in that space. So there are pockets where public sector would get a leadership status in the coming months and years, and those are definitely then both from a valuation plus a growth perspective attractive to buy. But in a lot of other spaces, I think that it's just the low PE which is driving up. So it's more of a saying that it can't fall any lower, but there's a lot of upside potential. So liquidity is chasing it. So I would still be cautious, pick good quality companies with good management, good professionalism in their management, and their sector should look good. With this filter, then yes, public sector is a good buy.
In fact, that's exactly the voice that we've been getting from most of the experts we've been chatting with all throughout, that there's still value on the table when it comes to PSUs. Here's a slice of our interaction and what market men told us.
We have been talking about
Space as a whole, but the brokerages are a bit divided. Recently, we saw a note coming in from Jefferies, which believes there's more leg to the rally, but Kotak is a bit more circumspect. Let's go across to Somit to get the views from both of these brokerages.
Well, like you see, there are two sides to every coin. There are two sides to this PSU rally as well. And both these notes have come in from renowned domestic and foreign brokerages. The first one is from the foreign brokerages, and that is on the bull side of the PSUs. And they are saying that the PSU re-rating has more legs to come going forward. Now, the outperformance that we have seen in PSUs over the last 12 months has come after an underperformance, after a very long underperformance prior to 2020. Now, there's also saying that the recent outperformance is largely on the back of the improvement that we have seen when it comes to return on equity, and also because of large EPS upgrades that we have seen. Now, previously, the return on equity of the PSU companies had fallen from 14 to 15% level to around 4 to 6% level, and this was primarily due to a drag coming in from the PSU banks. However, that has changed, and now again the PSU return on equities have moved back to 12-13% level, and profitability has also improved, which has led to many EPS upgrades for largely all the PSUs that are in focus. Now, they're saying that the index continues to trade at a discount of nearly 40% to the Indian benchmark index, that is Nifty 50, which offers a 15% average re-rating that could still happen if you want the discounting level to be at the normal averages that we had seen earlier. They're also saying that the change of the stance from the government side towards value maximization of PSUs is also one of the reasons which has led to this re-rating and could also lead to this re-rating even going forward. Now, they also have top 3 picks from the PSU space, and that is SBI, Coal India and NTPC, and these are all Jefferies' top PSU picks. The second side is from the Kotak note, and they are saying that they find it hard to subscribe to the market's new narrative of the PSUs. Now, they are saying that as per themselves, market is overly focused on the near-term profitability of these PSU companies and are clearly ignoring the long-term risks that are there, and which is on profitability side. Secondly, they are also seeing some business model changes, and also there is this disruption risk that is always prevalent in the market, and especially for PSUs going forward. Now, for capital goods specifically, they are saying that capital goods PSU may not enjoy the high profitability till till perpetuity. They are saying that electric utility PSUs are at a risk of weakening return on equity profile going forward. And when it comes to the oil marketing companies, they are specifically saying that there is their marketing margin and their profitability is highly volatile, and this could also fall going forward because of elections and because of increasing crude oil prices. So these are all the bear factors that Kotak has pointed out when it comes to PSUs.
Right, okay, that's a whole lot of perspective coming your way on which way the PSU rally may be headed. Let's just take stock of what else is happening, and banks really are seeing a big re-emergence. Sunil, have to talk about HDFC Bank. After it hitting the 52-week low, it almost seemed like value buyers were scurrying for the name.
I can't talk stock specific,
Sure.
unfortunately. So
sure, but do you see more merit right now in private banks selectively, or would you say PSUs is where you got to put in all your bets?
No. I believe that there's good value in private sector banks too, because they are well capitalized, well owned from foreigner perspective. So all foreign flows which come in, right, the passive money which comes in buys those banks. There's constant buying support, and I think that they will be able to take part in the capex cycle also, though not to the same extent as PSUs. So I remain bullish, and given a choice, if you ask me, from a quality perspective, I would rate a lot of the private sector banks as of very good quality relative to the top PSU banks. But that being said, there are also not so good quality banks in the PSU, in the private sector space. So if I may put it right, so I would say from a quality, I would rate private sector, good quality private sector at the highest, followed by good quality public sector, and then by lesser quality public sector, and then the private sector. So it's almost like a barbell. So in choosing a portfolio, right, I would tilt it in favor of good quality, whether it's PSU or private sector first, and then I would tend to prefer a PSU from a smaller bank perspective as related to a smaller private sector, because there I think the capital adequacy and the way they are run, the public sector being government owned, obviously governance and those are not an issue. That being said, from a second thing from a PSU perspective is the fact that we are just at the the NPA cycle has come down. I think the new NPA cycle is at least 4 to 5 years away after the lending starts in. So PSUs do tend to get hurt on the NPA cycle, but that's still 4 or 5 years away. So from a 3 to 4 year perspective, I think the PSUs represent a good bet in the public sector space, and adding a top quality private sector bank is good at that space.
But just let's take a look at what's happening in pharma. Natco Pharma is up 15%, Wockhardt is up 10%. Glenmark, of course, has been above 7% throughout the day. Ipca Labs has been holding up in the green, and a lot of these names from the pharma pack, even Eris Life Sciences, Gland Pharma, for instance, are doing well. For Natco Pharma specifically, the commentary was quite positive. They are hoping to go past the level of 1200 crore profitability and revenue past 4,000 crores in FY24, and the run rate that they have done in the 9 months does back that. They have been working hard on the M&A side of things as well, and they're likely to close something over the next 12 months itself. As far as Glenmark Pharma is concerned, the commentary on the con call regarding the profitability going forward was very strong. This quarter was a one-off, but they're expected to come back to the run rate of around 1,000 crores. For India, they are expecting a 10 to 12% growth, and they're likely to launch one of the special, respiratory drugs, which is expected to have a revenue potential of $80 million with high margins. So that's something as well, which is expected to provide lever apart from the R&D spend and the Reatlas contribution as well. But Soni, if I can ask you, within the pharma pack, a lot of buzzers today. Anything that stands out as a long-term uptrend stock?
I think granules would be the stock which is looking quite strong for short term and long term as well, and can definitely head towards 500 odd levels. You can see it has given a very good breakout with very strong volume. So there's a price volume action breakout today, and any dip you can get up to the level of 440 to 430 range can be a good range to re-enter the longs again. 400 seems to be a strong support in medium term to long term, and you can look for targets of 500 to 540.
Okay, so that's about the pharma space. Separately, what else is happening in the index is also insurance stocks from the broader market actually. SBI Life, a New India Assurance, a GIC. Naresh, anything that you would want to hazard a punt on?
So that would be SBI Life because that's been the best performer relatively in the whole pack. It's hit a new all-time high. And even though after the all-time high, even before at 1350, the stock was the first one to hit a new 52-week high and an all-time high in the sector. Now, for the last almost 3 months, it was in a tight range, 1360 on the downside, 1490 on the upside. Today, we've broken out above those levels. So it looks like a move towards 1650 in the short term. So SBI Life would be the best bet in the whole segment.
Okay, that's the take coming in on where some of the value trades could be. Just winding up for the day, and just want to mark what other than pharmaceuticals is holding out. And some of the technology names selectively are not looking bad. Wipro, of course, has sprung up a good 4.5% as we speak right now. LTIM, Infosys, they're all looking quite okay. And TCS as well is seeing some marginal green for itself. Adani Ports also a good 3% move. And so is the case with L&T with 1.5% of an uptick as we seek right now. Sony, just wanted your thoughts on the charts for L&T. It's not had the strongest weeks. There were a lot many other sectors which were at the fore, but closing in the week quite nicely.
Yes, so L&T we can see there's also some open interest unwinding at 3400 call option, which is indicating that the next week can be a positive week for L&T, and going forward, in this from current price 3340 is a good support. So as long as 3340 is getting defended in the next week, it can head towards 3500 also. So I think this is a good pick from current levels, and risk reward ratio is also quite favorable. There's good volumes as well as there's a positive RSI divergence, so quite a lot of positive parameters to head into the next week.
Okay, point taken. On that note, Sunil, we'll let you go. Appreciate you joining us today and have a good weekend. But from the technical experts, before we let them go, quick BTST trades. Naresh, you go first.
So first is a buy on Ambuja Cement's flag breakout here, stop loss at 580, target price of 600. Second is a buy on IDFC Limited bouncing back after a correction, stop loss at 117, target price of 124.
Sony, the BTSC trade. Sony, the BTSC trades from you.
So I'll just have one trade, that'll be SBI Life, good weekly breakout and keeping a stop loss of 1480, target of 1540, 1550.
Okay, Sony, Naresh, as well as Sunil, great to have you all on the show.